Welcome back. Hope you're having a good Friday morning. The gift nifty was suggesting, I think, a little bit of a positive start because overnight we did have good cues that are coming in. But let's discuss some of the stocks that we shaded out in our top 10 segment. Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us to help us out with that. Hi, Sid. Morning. Good to see you in. What's your view on CG Power? Yesterday they've got this booster shot coming in with regard to the semiconductor move. They've got getting a couple of JVs as well going. Your view on it? I recall the stock, 10, 15 rupees. Last few years has become a 400 rupee stock, but the prospects continue to look good. Your view?
Yeah, hi, morning, Nigel. Good to be with you early morning on Friday. So if you look at, first of all, CG Power, we don't have a coverage, so we don't have an official view. But if you look at what has happened over the past few years is with the Murugappa Group taking over the company, they have kind of revived the business growth plus the market confidence on the group to take the business ahead. And it coincided with the overall capex cycle. You see the stocks in the infra capital goods space doing very well on back of strong order book execution. And as you said, yes, it's a good big shot in the arm yesterday with the government approval for the semiconductor chip manufacturing plant in Gujarat. I think that is a game changer for any company getting approval in India. There were quite a few other applicants of that. Only 3 have got approval now. And I think that would be the list for now because in some time with the government will get into the model code of conduct where they would not be able to approve any new project. So the companies that have got the approval now will definitely get a head start. And we'll have to see how they manage the supply chain. So being in Gujarat and Sanand, I think that's a very good location to start with, especially if you want to do something which has a lot of inputs from global markets and you need to be aligned to the supply chain.
Okay, well, in just a while from now, we'll try and get you more details on what this means in terms of potential revenues for CG Power and the way forward as well for the business. But Siddharth, hi, good morning. I also wanted your thoughts on the auto sector because today you'll get auto sales for the month of February. And it's a mixed bag this time around. Good numbers from passenger vehicles, but very weak from tractors. So which are the stocks that you still like?
Yeah, good morning, Sonia. So I think this is something which has been reflecting now for quite some time. Passenger vehicles, good numbers would be definitely a big positive. Where if you look at within the PVs, we like Tata Motors, we like M&M, despite the slower growth in the tractor business, which is clearly evident. And even last time, the Escorts management had lowered the overall industry growth guidance for the tractor market. Two-wheelers is something which has been done a kind of flip-flop. We saw good numbers in December. Now we'll see, we saw kind of good numbers again in Jan, but Feb could be a good bit sluggish for two-wheeler space, which is again, within that space, we like Hero Moto, which is largely a domestic focused two-wheeler company, and in the entry level, which continues to do well. The rural side is something that is yet to pick up and which is what is impacting two-wheelers as well as the tractors. So preference within the overall auto space continues to be with the passenger vehicles. And within that, if you look at something like Tata Motors, which has kind of taken a big leap ahead in terms of market share for the EV segment, that continues to do well. M&M, the SUV business and the passenger vehicle business continues to do well, which is what we would like to focus on within the auto space.
Siddharth, I wanted your thoughts on Hindalco. There is a CLSA upgrade that has come in on Hindalco this morning to a buy. They have a target price of 635, and very interesting note where they say that following a sharp correction, they now believe that the concern is overdone on the stock. Would you concur with that view?
Yeah, so I think if you look at the last quarter revenues, the results, the EBITDA, which came in line, there was some miss on the PAT. But on an overall basis, we have a positive view on the metal space and especially on the aluminium side, where I think the business outlook continues to remain pretty strong. And we even, if you look at from a overall business perspective, the ongoing capex in Novelis, that would kind of take Hindalco as a global leader in the beverage can and automotive segments. That would although lead to some increase in cash outflow, but would also add to the overall business. So considering that all these things, we believe that and the concerns regarding the capex and delay in the commissioning of capacity, the stock has come down, and I think now it's a good level to look at a stock which we believe that the growth would come back. We have a target of 590 and a buy rating on Hindalco.
By the way, Shriram Finance was the other one, right? Did not do very much day before yesterday when the market corrected, but yesterday was up about 4%. Siddharth, any thoughts on this one? I mean, business-wise has been doing well, and then there is, of course, this nifty inclusion as well. And as someone been pointing out, the flows are going to be multiple times of the daily average traded volume.
Yeah, Prashant. So I think if you look at from a business perspective, Shriram has been doing quite well, and that is led to the stock price performance also doing well. So some time back, I think the expectations from the market based on the quant analysis, people started talking about how Shriram Finance could be included in the Nifty. However, there was some concern lately that there was a review mechanism of the entire process of what could be included in the Nifty, and there was some chatter that the management could think of including non-FNO counters, which kind of brought some pressure on the stock, because of which the stock seen some correction. Purely from a fundamental perspective, I would say that earnings continues to remain pretty strong. The outlook is pretty strong, and with the merger, we believe that it creates a very healthy opportunity for the overall company to expand geographical presence, have a larger workforce, leverage cross-selling opportunities, and introduce new products. So I think we are expecting an 18% PAT CAGR. Valuations have been pretty attractive. And to add it to all with the inclusion and the MSCI, plus a lot of flows that will come in from, because I think Nifty is the biggest ETF that is being passively tracked in India, will definitely lead to a lot of flows for Shriram Finance.
All right. The first of the auto sales have also come out, and it's not looking good for the tractor sector. Actually, it's been the third consecutive month where we've seen weakness in tractor sales. Escorts Kubota domestic sales down by 16.5% year-on-year. And the management says in the press release that it is because of the continuing impact of uneven monsoons coupled with insufficient rainfall and diminished reservoir levels that has impacted the Kharif output. And hence, since the Kharif output has impacted, the sales of tractors have also gotten hit quite a bit. Siddharth, quick word from your end. Both Escorts and M&M have been under pressure. In fact, last quarter, both these companies scaled down their full-year guidance as well in the tractor industry. Would you be cautious here, or do you think it's a good buying opportunity?
Yeah, Sonia, so as we were discussing, I think tractors is something which could remain weak for some time. Rural demand is not yet picking up. And between the two, definitely M&M, because of its other businesses, the passenger vehicles as well as the SUVs, I think there is some incremental growth coming from that side, and that leads to a positive view on M&M, where we definitely have a buy rating. But Escorts is something that we believe could because purely it is focused on the tractor business or the rural side, where things are not looking that great. So we have a neutral rating. So between the two, prefer M&M, but I would say that overall tractors and the rural side would continue to remain sluggish and under pressure.
Okay, all right. Siddharth, thanks a lot for giving us your view on that. For the